All right, everybody, stocks by the numbers. Welcome back. Quick update here after earnings are now posted. First, we're looking at Enovix, ticker symbol ENVX, listed here on the NASDAQ. This company actually surprised me and actually came out and posted over a double of what analysts were expecting here. 3.1 million on the revenue side. Company comes out, posts 7.38 million. So boom, you immediately get that pop. I still have to say, unfortunately, I'm not trying to beat you guys up. I'm happy that you're seeing a little pop here. Obviously, if you got in just for the earnings and now you're up 5%, you know, anyone who makes a quick profit here, more power to you. At the end of the day, though, again, I still think that this company is still overvalued. But again, that's just my opinion. I understand, they're coming out with their new battery and they're going to, redefine the smartphone space and everything like that. Fantastic. But again, in my eyes, I just think it's way too high, and I think it has to come back down. It looks like it didn't want to go down too far. As I spoke about in the last video, it came down to like the 830s right there. So I don't know if, like, calling this a billion-dollar company is not like out of this world. You understand what I'm saying? Like, it's not drastic for me to say that. So a 50% haircut, though, I mean, you're talking back to $6. That's what I'm saying. I don't know if everyone's going to let it go to $6. I just don't know if I see it like that. Maybe it can come down here to like sub $9, but then, it could potentially form that double bottom and bounce back up. But I don't know. I really don't know. Again, 7 million for a quarter is not worth $2+ billion in market cap. Like, I'm sorry. That's just simple logic here, but I wanted to show, where are we here? Bear with me. Expects first quarter revenue to be between 3.5 and 4.5 million versus estimates of 4.56 million. Okay, so they're already saying, listen, this was a great quarter. Next quarter we might be light, right? However, they do talk about, this isn't the article. They do talk, this isn't the article either. They do talk about how, like, the second, third quarter of 2024, they're really going to get things moving. So that's why I can also appreciate the fact as to why they're not beating up the stock, because everyone's anticipating an even better 2024 moving forward. As you see, we plan to begin sampling high cycle life smartphone batteries, which we call X1M, beginning in the second quarter of 2024, right? So that's what I'm saying. Inside of like 6 months from now, this stock may really start moving, whether we feel in the numbers it's overvalued or not, just off of the anticipation of what they're looking to bring to the table here, second, third quarter of 2024. As you see, they speak highly about their team in Malaysia and then say they rebuilt the management team with experienced leaders. So in my opinion, that, what'd you do? You stepped in, you bought the team, and then you fired everyone, put in your own team. I don't know. But either which way, it really doesn't matter, right? Because the numbers speak for themselves, and the company came out again and posted north of 7 million for this quarter off estimates of 3 million. But they go into, my apologies, I'm trying to find it here. There were some of these numbers that scared me a little bit. Bear with me. Total revenue in the fourth quarter of 2023 was 7.4 million. Okay, obviously this time last year. Last quarter they did $200,000. Our GAAP cost of revenue of 19.8 million in the fourth quarter was up from 16.8 million in the third quarter. Our non-GAAP cost of revenue, 17.1, was up from 14.4 in the third quarter. Our GAAP operating expenses of 52.4 million in the fourth quarter were up from 33.8 million in the third quarter. That's like a 60% jump. Our non-GAAP operating expenses of 40.3 million in the fourth quarter of 23 were up from 18.8 million in the third quarter of 2023. How is it so expensive to do this? And again, just understand here where I'm coming from, because again, I'm not trying to bash the company. I'm just looking at some of these numbers here. And I think it's a very good sign that they posted 7 million and they blew those estimates out of the water. Fantastic green flag, right? But how can your expenses move so much? And if no matter what's going on, the more money you make, that much more it's going to cost to operate and bleed for it, then realistically, how long can this be sustainable? Right? Because again, I know people in the comments might be like, dude, you're kind of beating up the stock, like, they just made like 7 million. They beat, estimates. Fantastic. Really fantastic. But it also cost them tens of millions of dollars to do so. And the jump that we're seeing, I feel like, isn't that proportionate enough to what they actually brought in. However, I will say the company has cash. As you see here, we exited the fourth quarter of 2023 with $306.8 million of cash equivalent, short-term investments due to cash used in operating activities, $27.2 million, capital expenditures of $28.8 million. So the company has some cash, which of course is a very good sign, because even if they are bleeding, that means they'll be able to either keep themselves afloat, or again, like we're seeing now, a lot of M&A action taking place, again, mergers and acquisitions. So who knows, they can step in, they can buy another company for a couple of $100 million, who knows. For the fourth quarter, yes. Look, so for the fourth quarter, we expect revenue between $3.5 to $4.5 million. An adjusted EBITDA loss of 24 to 31 million. How is that sustainable? That's what I want to know. And again, I know they're talking about like these new factories over here, and now they got the team in Malaysia and whatnot. So perhaps it can potentially hit a point to where variable business model, and it gets to the point to where just the immense excess and increase of revenue coming in will just eventually outweigh the operating expenses. But I don't know, it doesn't seem like it, right? It really doesn't seem like it. I mean, maybe if they hit like that $100 million, $200 million mark somewhere down the road, like maybe then they'll kind of like be in line with operating expenses somehow. But as of right now, I don't know. That seemed like a pretty big jump in losses to make that 7 million. You know what I'm saying? And that's what I'm saying. I'm not necessarily saying this is a bad company, or they can't turn everything around and completely make this a viable business, because of course it seems like it is slowly and steadily growing. All of a sudden now that they're bringing in millions of dollars. But see, that's why it's a situation like this. Again, I'm not bashing your company, but it's a situation where we look at the numbers, right? They're bringing in a couple of million. Everyone's saying they're worth a couple of billion. But a lot of people, again, are forgetting that we're near market highs, right? So if at any point the market decides to have a big correction and really start chunking down and selling off day by day, goes on another, 2-3 month sell-off or something, if that happens, I just want you to know this Enovix stock will not be held up. So if you're, contemplating stepping in my opinion, here at this 12 and change level, if the markets really do begin to pull back, like this stock can easily drop down to, into the single digits, into the 9s, the 8s, and the 7s again. I do want you to know that. And that's why I look at stocks the way I look at them, especially when, in my opinion, I say a company is overvalued in the numbers. Because if they're overvalued in the numbers, they can drop at any time. And especially looking at how quickly they ran up. And in some cases, it's for nonsensical reasons, right? So this company really wasn't doing any business up until this point. But again, it was running up here back halfway through 23, right? We looked at it. I looked at the numbers. I was saying, no, this thing should be much lower. It ended up breaking out and going even higher above 20 before it came back down to the apex, and then eventually broke down and dropped as I expected. But again, I was wrong immediately in the short term. So sometimes it might just not make sense as to what is taking place with a stock in that exact moment. But when looking at the numbers, what I'm trying to say is because the market seems overinflated, in my opinion, that means that if like the Dow takes like a 15-20% haircut and starts to sell off thousands upon thousands of points, obviously the rest of the major indices are probably going to follow suit if that happens. But long story short, what I'm saying is if this is not like a fair or undervalued price, then what you're doing is you're potentially leaving yourself as the bag holder up here at 12. If markets do correct and sell off. You understand what I'm saying? So if you buy in here at 12, yeah, it might slowly rally up to 14. And you might be up the whole time since you bought it. And then if the markets do correct, boom, it chunks down. All of a sudden it's back here at 809 or something. And it goes back down towards those 52-week lows. Now it's going to take just that much more time for you to regain that value. You have to hope that the company continues to grow that revenue and beat estimates along the way, potentially getting some price target increases, right, to help out the value of the stock. I mean, a lot has to happen if the worst case scenario happens. You understand what I'm saying? That's why even, like I said, I always go back to something like a Hershey. When we looked at Hershey, looking at the numbers, seeing that it makes a lot of sense that we could say it's undervalued in the numbers. That's why I even said if the market continues to sell off and it does really drop down, it's not going to drop down as much, right? So something like a Hershey from here, 193.5, yeah, it could pull back to the 180s and the 170s, heading towards new 52-week lows. But percentage-wise, that's not really that big of a drop. Whereas on the flip side, something like Enovix, if markets do decide to correct, you will be buying a company, again, that just made $7 million a quarter, and it was a great beat. $7 million a quarter. Currently worth $2 billion, right? So that's what I'm saying. If at any moment everything corrects, this stock can easily take a 50% haircut and no one would be able to say anything about it. Because even at $1 billion, you can make the argument that the stock is overvalued. But if it does have that pullback, again, now it's down to 6. Now you have to give it several quarters. You have to hope that the whole market is not just in sell mode moving forward, right? You have to hope that it was only a rough 1, 2, 3 months, and now we're making that U-turn recovery. Because, of course, if we continue to sell off, your stock Enovix will continue to stay down. But, hey, I know I'm kind of beating it up. I can feel it. I can feel that I'm beating it up. But, again, we always say, men lie, women lie, numbers do not lie. And looking at the numbers here, great quarter for Enovix. Of course, them saying that they're kind of going to be potentially under next quarter moving forward, that is again another reason why I'm just looking at current revenue and the current valuation. Because in my eyes, I think it could still pull back. And again, even if it comes up here to like 14, 15, right, going into these earnings, they kind of let you know that they might be coming up short, right? So if that happens, then obviously the stock's going to take a hit. It's going to come back down right to where it was. You understand what I'm saying? So that's why I don't know. I don't know. Those losses seemed extreme too. Those losses seemed extreme. To just pump out $7 million, you're telling me operating losses really jumped up like that. I don't know. But looking here, no. Looking here on the weekly, we can see the top Bollinger Band there on the weekly was 1407. Where'd that stock hit? Stock hit 1418 and then immediately pulled back and started dropping all the way back down to about the low 12s. And now you can see it just kind of flattened out. It got very tight here. Does basically look like a symmetrical triangle. Right? We have like an even line going up and an even line going down. That technically isn't really a clear indicator. That means the stock can either break higher or lower. But again, I know people like it. I know people like it. So a lot of people, may be buying in here after seeing the company made $7 million, and they're looking to just tuck it away and add over time. You know what I'm saying? So I can understand that argument. But I would say, in my opinion, the best way to play this specifically would be to always keep cash on hand. so that if for any reason, someone does downgrade it, lowers their price target, or if the company happens to miss earnings, in the next 1 to 2 quarters and takes a big hit, if markets do correct and this kind of starts coming back down to earth, right? You want to always have cash on hand, in my opinion, especially with a company like this if you're playing it, because again, if it does take that hit, drop back down to the low tens, you want to be able to have a few dollars on hand to add and bring down that cost basis. And obviously, if it drops to 9 and 8, same story. But very interesting pop there, and then immediate pullback as we see right now after hours, 1234. Okay, so on the weekly, we still don't know, but on the weekly, it seems pretty far away from that 50-day moving average there of 1309. 1234, so that's like there, not exactly back to the top Bollinger Band, but again, could take like a day or two and then pop higher to 13 off of that good earnings beat. So we'll see. Only time will tell. But listen, again, I like the story, what they're projecting themselves to do, how they're gonna, change the space, and what we can see the next tick now is below this line here, so the stock might come back and fill the gap before potentially bouncing, getting back up to plus 12, but we'll see what happens. But again, I like the story, I like the space. Good beat here, 7 million, fantastic, but apparently it cost you like 50 million to make 7 million. That's what's bothering me. That's what's bothering, and that's why, again, people are saying, oh no, they're going to be huge in the space, eventually they're going to do 100 200 million of revenue a quarter. Listen, that sounds awesome, right? And if we look at it like that, yeah, of course it's going to be worth more. But on the flip side, is it going to cost 600 million to make 200 million? You understand what I'm saying? That's what I want to see. So if we're able to begin to really narrow these losses and get these expenses in check, then I'm all for it. Even if it's overvalued, because again, we always say that a lot of stocks trade based on future value and future growth, right? So if we're pumped about the future and then they deliver in the future, then it will be worth even more looking further into the future, if that kind of made sense. Yeah, I think it made sense. But I just talked a while about Enovix, just because, again, those numbers, those expenses, that's what really, got me a little fired up. So that's why when I looked at the stocks that we just looked at, I didn't want to say, oh, I was right on this one, oh, I was wrong on this one, right? I wanted to dive deep a little bit into Enovix there. But Palo Alto, what we're seeing here is essentially what I said, right? Even if the company beats, they were just tremendously overvalued. They went on a massive run, basically all of 23, right? And we have to just come back down to earth a little bit. It's actually dropping significantly more than I thought, right? In the video I put out, I said about 10-15% here to maybe like 330, the low 300s, and that's exactly where it went. And then it looked like the stock formed this descending triangle and then just kind of broke, and now it's just in free fall mode, because again, people are looking at it and they're saying, wait a minute, this company makes $2 billion a quarter, but the market cap's up here, 120 billion. No. We're going to short some of this. We'll buy it back in the mid to low 200s, and then the stock can move forward and take its next leg higher. That's the way, in my opinion, I would look at it. And unfortunately, it seems like a lot of traders are jumping on board now. And we can see PANW, Palo Alto Networks, down over 20% currently after hours. However, nice beat on the EPS side by over 12.33% there. And on the revenue side, they beat by a couple of million. So you have to give credit where credit's due. Again, a beat is a beat. But that's what I mean. This is something, these tech stocks, they just went too high too quick, man. And that's why always, even looking at a company like NVIDIA, it's like, yeah, they're killing it. They're leading the space. But also, they're making tens of billions and you're telling me a trillion plus market cap. It's like, even if the company beats, they could take a 10-20% hit and no one really would be able to bat an eye because it went so high so quickly for all of you. And you're up probably who knows how much. You know what I'm saying? So to slightly bring it back down to earth and just try to bring it back down to reality, it's not exactly a crazy theory to throw out there. But yeah, Palo Alto beat on the top and bottom line, stock down 20% right now. Let's bring that up on stock charts very quickly. We're at what? 292. Yeah, see, so we just broke through the 50-day moving average here on the daily. And chances are, I would say, probably pulling back to that 200-day moving average there, 259.59. Again, the RSI was high on the daily and the weekly. That's what I mean. There were a lot of indicators pointing that PANW was just overvalued in the numbers and in the technicals. So, they come out, they beat again, and hey, we just got to bring you down just because of how much we brought you up, right? You can't get too upset that you're down because of how much you've been up. So, we got to take the good with the bad. But as you see here on the weekly, we're now slightly below this mid Bollinger Band here of about 299.5. We're here at 291, and looks like we might continue to drop. So that's why, again, on the daily, the moving average was about like 259, and here on the weekly, we have a 50-day moving average 252.07. So in my eyes, that's what it's looking like anyway. It's looking like, in my opinion, that's where they're going to take the stock down there to the 250s. Who else did we speak about? Realty Income. Realty Income, as we see, was bouncing around a little bit and is basically flat here after hours, right? I called, in my opinion, overvalued and I would play puts. And the company ends up missing on the EPS side by 10% and beating on the revenue side by about 9 million, as we see here. So we know that the revenue is strong, right? And we know that it's going to be consistent, and we know that it's going to be stable. But again, just looking at the numbers here, 43.5 billion, 40 times earnings. This is why all I'm saying is we can have a little bit of a haircut. That's all I'm saying. Have it sell off, down from 52. Have us drop down back to like 45, 44, right? And if you're looking to take a position in this for the longer term portfolio, obviously an attractive price like in the mid to low 40s, that would definitely be more advantageous than starting to buy up here at 52.5. However, if you were thinking about buying it, and you wanted to take a position, you were waiting for these earnings, and you see now that they beat on the revenue side again, as they do. If you're able to have consistent income and you can consistently add to a position and average down, then I would say go for it. If you're telling me you have X amount of dollars, you're looking to lock it up now, is this a good price, right? In my opinion, I just think it's a little overvalued. So if you were looking for like that one-time buy and hold and money's tight, you can't add to it and average down, then in my opinion, I would say, again, markets, we're at these highs. If we start to correct and sell off for virtually any reason, anything that you've really had your eye on, you can get for a more attractive price, in my opinion, right? That's the way I'm looking at it. And I'm sure that made sense. And I understand we're all very impatient. Oh, no, I want to make money. What if this goes back up to 55, 57? I'm going to miss out on, an 8, 10%. I understand how you feel. But if it's more of a long-term hold, then you want the best possible price, right? And especially if you don't have the income to add to it over time. So if you're telling me, again, one and done, in my opinion, I would look for a better entry. If you're able to consistently add to the position, hey, listen, yeah, they did beat on the EPS side. Yeah, it could get beaten up a little bit, but they did beat on the revenue side. So, it still remains pretty strong here, but I still think it's going to take a haircut. Toll Brothers comes out and just keeps posting pretty decent numbers here and making me look like a fool, but usually I like to look at the revenue and the market cap, right? We looked at that before, and we can say that the market cap's basically in line with like the yearly revenue that the company's bringing in. So you could make the argument that it's undervalued in the numbers. And of course, we have a PE down here at 8.25, right? So again, I can understand that they came out, really nice beat on the EPS side, somehow posting 2.25, but nice beat on the revenue side as well, beating by over 70 million here, almost a 4% beat on the revenue side. So I can understand the fact as to why it's seeing, a 3+% pop. It's probably going to stay up and probably going to continue upward here after hours. But I was looking. No, I lost the fibs, but I was looking, chances are, in my opinion, probably like the 110, 111 level. In my eyes, I really do think that's where they're going to take it. And again, you can see these double tops, right? So right now, no, I'm sorry, my apologies. I was going to point out a potential ascending triangle, but you can see right now the stock is up at 106.70, so it's above those two high points. So we are no longer in the channel, but as you see, I drew out a lot of trend lines here on this stock, trying to just get an idea of what we could potentially see. And again, the good thing about TradingView is you can extend, boom, see, just extended that. Boom, indefinitely extend something like that. So now, staying with our trend lines here, we can see that here it's at 106.70, and up here is about 107.5, 107.60. So that's potentially where the stock can go, like first thing in the morning, and then you can have a small rejection, and then it could flatten out, and then it can slowly try to get up and retest this trend line and then break above it into the 110s, 111s, which in my opinion it probably will. In my opinion, it probably will. Like I said in the previous video, real estate remains strong as we see the company beat earnings again, right? It's all about building and renting and buying and flipping, and everyone and their brothers doing real estate now. So, something like Toll Brothers, I can appreciate the fact if you're pretty bullish on it and you're pretty pumped about it. Again, in the numbers, I do see growth. I just feel that the real estate valuation of our real estate market, it's just got tremendously overinflated. And even if you just jump on YouTube, you'll see multiple videos of people breaking down, just a few years ago, how much credit you needed, how much of a down payment you needed, and what your mortgage payment would have been. And now looking just 3-4 years later, looking at current market values of houses and how much credit you need, how much more you would have to put down, how much more your mortgage would be, right? So just looking at situations like that, like, yeah, they can keep building, and it might be great for the immediate short term, but this is why, again, I was saying, I feel like the real estate market may have some sort of big correction soon, because it really did get overinflated. But just looking at some of these trend lines, again, we can see, in my opinion, Toll Brothers probably going to keep going. But there was an article, hold on. Okay, deliveries, about 2,500 a quarter, over 10,000 for the year. You can see beat on the revenue side. 1,900 homes, average price of about $1 million. That's what I mean. That's a lot of money. We throw around these millions and these billions. That's $1 million is a lot of money. It's a lot of money for a house. But no, there was one here. Toll Brothers backlog value was $7 billion at Q1 end. So obviously the backlog is nice here. You can see Q1 homes backlog 6,693. However, it says here that the Q1 homes backlog is down 13%. So again, kind of a mixed bag, unfortunately, but overall, as we're seeing here, I would say definitely more green flags than red flags. So if you're looking to jump in Toll Brothers after earnings, if that's what you were waiting for, understandable. Very understandable, in my opinion, right? Looking at a lot of the fundamentals, I would say out of those 4 companies we looked at, in my opinion, if I was to buy one, it would be Toll Brothers, right? Again, Realty Capital, just a little overpumped, in my opinion, $43.5 billion. Company is now just bringing in $1 billion a quarter, right? So that's what I mean. They're trading like 15 times annual revenue. We got a PE up here at 40, so it's a little high. We recheck Palo Alto, boom, stock's taking a 20% hit. Steam Friends, my apologies. I keep forgetting to sign off Steam, guys. I'm sorry about that. But market cap up here, 115 billion, right? PE 200 plus. Company made less than 7 billion. Market cap 115 billion, right? So that can come down a little bit. And what was the other one? Enovix. Yeah, I mean, they just made 7 million, great quarter. Current valuation 2 billion plus. So that's why, of those 4 companies that we looked at today, even though a lot of them did post some decent numbers, in my opinion, if I was a buyer, I would say Toll Brothers. However, again, I still have to stick to my gut and stand by my original analysis here that the real estate market has just gone way too high. And I just have a feeling that something negative is going to happen. And, I hate to be that guy. I'm not trying to be a pessimist. I'm not trying to like put that negative vibe out there. I'm just looking at it realistically. And again, even the fact that it went so high so quick, and now you have like everyone just basically showing how much more is required to buy a home today as opposed to just a few years ago. I'm telling you, in my opinion, it can only be sustained for so long. And I don't know if it's going to be, 2008, 2009, but if these prices begin to fall and all of a sudden buying is down and new home buying is down, I mean, it should inevitably fall off. That's just my opinion. But yeah, looking at all these, let's look at stock charts actually. Looking at all these stocks, I would say in the numbers, in my opinion, Toll Brothers definitely seems the most attractive. We can see now it's above the top Bollinger Band on the daily. And we can see top Bollinger Band on the weekly, 115.83, right? So not necessarily exactly where it's going to go, but again, based off of another earnings beat and the fact that their market cap is kind of in line with their total revenue. They have a low PE, good earnings. They just beat on the EPS side by a nice margin, over 20%. So I can understand if Toll Brothers starts to slowly keep climbing up to the 110, 11, 112 mark. That's understandable. So, yeah, if I had to be a buyer of any of them, I would say Toll Brothers. But again, I would tread lightly in my opinion. And I'm going to end it there. So once again, stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. I'll see you in the next one.